Josh, today I wanted to share with you some findings from one of the YouTubers that I follow who looks into GME.
Yeah, there seems to be some irregularities around option expirations at the end of the month where we see a run up into GME. I'm not necessarily a GME bull like Justin here, but I do like to see this type of trend that has continued to happen. So Justin, let's show me what you're talking about.
Absolutely. And so that's the key thing, trend. I guess there's irregularities everywhere, but this is something that we seem to think, and when I say we, I mean people like PyFi who have far more insight than I do on this. Anyways, there are 3 cycles that we want to talk about. One will be for November, one will be for December, and one will be for late January. The first cycle is going to be for November 26th. And so editor, if you want to go ahead and throw up the November 26th calendar, this is what it means. Due to the various mechanisms of how it's believed the short interests are currently, should we say, holding their short positions, we believe that there will be a window from the 22nd to the 26th, that's currently in blue on the calendar, of where the various mechanisms that currently hold the short have to be renewed. In the process of doing this, you generally have seen in the past GME run up and then run back down. Now, again, as it's poorly understood, the window that this has to occur is in these blue dates, but generally in the past, it always occurs towards the end of the dates. One way to play this is you might consider buying an ascending call portfolio, starting on about the 19th. That's going to be Friday. So perhaps you buy one in the money call or one call that's just in the money, then maybe 2 calls further out of the money, 4 calls even further out of the money than that, to whatever your risk tolerance is. Then you do the same thing on Monday. That would be the 21st and perhaps maybe the 22nd, just to kind of see where the market goes.
Yeah, and if you're someone who really follows the market, you could be saying, well, GME's really, I'm not sure if it's being shorts, if it's still being shorted or whatever, but you can say, well, I do know there are a lot of irregularities in the around OPEX week. We can see this even in the stock market. Volatility becomes more expensive because there's a lot more risk that there could be something that happens. So there's been a trend where during this week, dealers have had to reposition their books. And for some reason, GME just happens to shoot up. It just happens to shoot up around, do you have any numbers, like $30 to $50 somewhere around? Like a massive jump. So if you have options going into this, you could get a high asymmetric gain.
Yeah. The goal is by going in with weekly options, you ideally reduce the bill for the option. So you have less capital that you need to deploy. And if you catch the cycle right and the price runs, it'll run very much in your favor. So the goal from all of this would be, assuming the November 26th cycle plays out correctly, you would take profit from that. And then you might take, again, should your risk tolerance allow it to do so, you would target calls for December 23rd. And the reason you target calls for December 23rd is that, again, if you note in blue, 16th, that is December 16th to the 22nd, we believe that there has been another repositioning or rollover for the various futures, options, etc., the various mechanisms, poorly understood by us, that might be used to create a short GME, or to use to otherwise cover a GME short.
Yeah, and this is an extremely risky play. You're not going into this with a massive amount of capital. It's something that could have a high asymmetry. First off, when people say options are risky, they say the super short term, going 2 weeks out of the money calls on companies, that is what's risky. That is extremely unprobabilistic to play out. But if past performance is any indication of future success, then, and if there's something to this, then there definitely could be a chance to make a lot of money in the process. So I'm someone who's not necessarily a GME bull. I just listen to what Justin tells me, and I think that there could be something there, but I don't actually want to put that like a real position size on. So I'm going to see with this OPEX week month when it occurs, I'll get a few call options that are still somehow extremely expensive. I was just looking at the options chain. If you want to go out 7 days on the GME, you're still spending, say, like $500 to $600 on a 7-day out call. So it's still extremely expensive. You could buy like a bear call spread that would reduce the cost a little, but still it's going to be slightly expensive, but extremely high asymmetry. So we'll see what happens.
Yeah, it's your gambling money for that. But the point is that if the November 26th play works out, you might deploy 50% of the gains to the December play and then 50% of the gains to the January play. So just for the dates, if you were looking to just enter in December, that would be the 13th to the 15th, so that you're in position for the 16th to the 22nd, which is when the price action is expected to occur. And then, assuming that works out well, of course, take your gains, and then you might roll in those gains into the January play. The January play is expected to occur from the 24th to the 28th. But as it stands right now, the closest option, or the next expiring option after January 28th, is February 18th. Now, of course, closer in, there might be more dates open, but if you were to go today, that's what you've got.
Okay. And we're just going to, I'm going to just explain to you how much asymmetry could actually be here. Let's say you, and if this works out perfectly, if it works out exactly how we're saying, to the exact degree, this is something that could be expected. So let's say you just buy one call option that is slightly out of the money.
A weekly.
Yeah, a weekly, but you do it like a few days before options expire. And let's just say past performance, GME runs up $50 in a few days. How much would the option actually go up? And implied volatility, it has a lot to do with it. But if the stock's running pretty fast at a high degree, you could be expecting like 500 to like a 5 to 10 bagger on options. So let's say it's a $500 option, and then let's go on the small side. If it goes up $50, I'm thinking it's more, or you're probably going to make 5 to 10 times, probably on the higher end of that spectrum. But let's go on the small end, and let's say you make 5 times your money. So you start with 500, then you're up to 2,500. Then if you put 50% of those gains into the next one, that's in December, then the exact same thing happens. Now you have 2,500,
but you're starting from a larger base.
Exactly. Yeah. So that 2,500, you're going to have that same 5 to 10 bagger if everything plays out perfectly. If big if 25 times 5. I'm not the math guy, but
and it's late. Yeah. So whatever you do the math.
Like,
you do the math.
Then you're up to like fucking like 10, more. like over 10,000. Then you're going to do the exact same thing again, which if you pass performance, this is pure speculation. But if it happens again, then that, say, call it 10,000, could then turn into around 50,000. This is how you could potentially turn a $500 trade into 50,000 if everything works perfectly. This is something that I think is extremely unlikely, because if this does happen, then the market will actually adjust to it. Yeah. And we'll see a run up beforehand. But if it doesn't, then this is something that could be an incredible opportunity. As someone who's not necessarily a GME bull, I have a no position. This is something that I'm going to try.
And here's the other thing. Let's say the market does adjust to this, and let's say that they have actually correctly identified when there has to be price action as the short interests are covered or rolled over. Then that means when you have more and more people FOMOing in on the options, you create a self-fulfilling cycle. So anyways, that's basically kind of where it's at. You guys can go back to the video and see the calendars if you kind of want to see the exact dates. But Josh, we'll have to see how this plays out.
See ya.
Take care.